Are you a business aiming to drive financial inclusion, increase customer base, or boost profits? If yes, SACCOs can be your strategic partner. But the problem is, savings and credit cooperative organizations, SACCOs, are one of the most overlooked yet powerful growth channels in your market. These member-owned cooperatives are the backbone of financial inclusion in Africa. By 2023, the continent had nearly 24,600 SACCOs that served 17 million members, with a combined savings portfolio of $10.48 billion and assets of $8.62 billion. This level of scale reflects both trust and real economic opportunity. For businesses like yours, SACCOs offer much more than social impact. When digitized, they become streamlined distribution networks capable of handling payments, dispersing loans, onboarding digitally, and integrating smoothly into modern payment systems. And if you're targeting the underserved, boosting transaction volume, or fulfilling inclusion rules, SACCOs are a natural partner with both strategic and financial upside. Missing this wave means losing out on the next frontier of growth. But, don't worry, we have got you covered. This blog explores all about SACCOs, their benefits, working, impact, and more. Here you go. A SACCO is a member-owned financial cooperative where members pool their savings together and provide loans to one another at reasonable interest rates. Unlike a commercial bank, a SACCO's main purpose isn't to generate profit for shareholders, it's to serve the financial needs of its members. Example, in Kenya, the Kenya Police SACCO serves over 70,000 members. It offers loans at lower interest rates than many banks. Plus, it helps officers and their families fund education, start businesses, and buy homes. Types of SACCOs. There are 4 main types of SACCOs. They are community-based SACCOs. Serve people living in the same geographic area, such as a village, town, or region. They focus on local development and building trust among neighbors. Employee-based SACCOs. Formed by staff from the same organization or sector, offering tailored financial solutions like salary-backed loans and group insurance. Investment-based SACCOs. Centered on pooling funds for joint investments such as real estate projects, farming ventures, or business start ups. Agriculture-focused SACCOs. Support farmers and agribusinesses with seasonal loans, farm input financing, and market access initiatives. SACCO industry growth potential. In Africa, SACCO membership has been growing steadily due to trust, accessibility, and cultural fit. And countries like Kenya, Uganda, and Tanzania have vibrant SACCO sectors, with digitization opening the door for even faster growth. As rural communities gain mobile internet access, SACCOs are positioned to become the bridge between informal savings groups and formal banking systems. How a traditional SACCO works. To understand where digitization creates value, it helps to see how a traditional SACCO operates today. Most follow a similar cycle of how SACCOs work. Step 1. Membership and ownership. Anyone who meets the SACCO's criteria, such as living in a certain area or working in a specific sector, can join. Basically, members buy shares, which makes them part owners with equal voting rights, regardless of how much they save. Step 2. Savings mobilization. Members contribute savings regularly, often monthly. These savings build the SACCO's capital base and determine the size of loans a member can request. Step 3. Loan application and approval. A member applies for a loan, usually backed by their savings and guarantors from within the SACCO. And then the approval is handled by a credit committee, which often meets only monthly or quarterly. Step 4. Loan disbursement and repayment. Funds are disbursed in cash or by check. But, repayments are made manually at SACCO offices or through bank deposits, with records updated by hand. Step 5. Governance and decision-making. Major decisions are made in annual general meetings, AGMs, where every member has one vote. and the committees oversee credit, supervisory functions, and management. SACCO vs. Bank. Banks often see SACCOs as basic competitors, but they can be strong allies. SACCOs excel in local trust and community reach, while banks and fintechs bring technology, compliance, and advanced financial products. Together, they can deliver more value to underserved markets than either could alone. Why members choose SACCOs over other financial institutions? If banks and fintechs offer more products and faster technology, why do millions still prefer SACCOs? The answer lies in trust, accessibility, and community connection. Understanding this loyalty is key if you want to build partnerships that work. Here's why members choose SACCOs. 1. Deep community trust. SACCOs are embedded in the communities they serve. And members often know each other personally, and decision-making is transparent. This familiarity creates trust that large financial institutions sometimes struggle to match. Example, a farmer in rural Uganda may join the local SACCO because the loan committee includes people he has known for years and has a trust built through shared history. 2. Easier access to credit. Loans are approved based on member contributions and peer guarantees rather than rigid credit scores. This flexibility makes SACCOs a lifeline for individuals without formal credit histories. Example, a boda boda, motorbike taxi, rider in Kenya can access financing for a new bike through his SACCO without needing bank collateral. 3. Flexible terms and competitive rates. Because SACCOs are not for profit, interest rates here are often lower than those at commercial lenders. Plus, the repayment schedules can be tailored to seasonal or irregular incomes. Such a level of flexibility makes members feel less pressured. 4. Profits go back to members. If there's any surplus, it's shared among members as dividends or reinvested into better services. This ownership dividend creates loyalty and keeps members engaged. 5. Focus on local development. SACCOs provide loans that often fund projects that benefit the entire community, from small businesses to education. This shared prosperity strengthens the SACCO's role as a driver of local growth. All the above points show why SACCO members are highly engaged and why integrating with SACCOs can deliver loyal, transaction-ready customers for your business. So, you need to act fast to leverage the benefits. Challenges faced by traditional SACCOs. While SACCOs have strong community trust, their traditional operating models limit their growth and efficiency. For financial institutions like yours who are looking to partner with SACCOs, understanding these gaps is key because each challenge is also a market opportunity. They are: 1. Manual operations and record keeping. Many SACCOs still rely on paper ledgers or basic spreadsheets. This slows service delivery, increases human error, and makes it harder to track transactions in real time. 2. Limited geographic reach. SACCO members often have to travel to physical offices to deposit savings, repay loans, or attend meetings. This limits growth potential and reduces convenience for rural or mobile populations. 3. Weak data management and credit scoring. Without digital systems, SACCOs struggle to maintain accurate member records or generate reliable credit histories. This limits their ability to offer tailored loan products or expand lending capacity. 4. Fraud and transparency risks. There is a possibility of fraud, mismanagement, or data manipulation where there are cash-heavy transactions and manual approvals. This, in turn, can lead to a decrease in trust if issues arise. 5. Compliance and regulatory pressure. As governments tighten financial regulations, SACCOs without digital reporting tools face difficulties in meeting compliance requirements efficiently. This can lead to heavy fines and penalties. Why SACCOs matter to banks, fintechs, and financial institutions. For businesses like yours, SACCOs are more than community cooperatives. They're high-potential distribution networks for financial products and services. And their deep community trust, loyal membership base, and growing transaction volumes make them an attractive partner for sustainable market expansion. By partnering with SACCOs, You gain access to ready-made customer relationships in markets that are otherwise expensive and time-consuming to penetrate. And when SACCOs are digitized, this potential offers new products, higher transaction volumes, and faster onboarding. Key partnership opportunities. The key partnership opportunities that SACCOs 1. White label digital platforms. Offer SACCO-branded mobile and online banking platforms powered by your infrastructure. This lets SACCOs keep their identity while giving you transaction volume and fee revenue. 2. Agency banking partnerships. Enable SACCO branches to act as banking agents. This extends your physical reach into rural areas without the cost of building branches. 3. Mobile wallet integration. Link SACCO accounts to your mobile money ecosystem. Here, members can transact instantly while you benefit from increased payment activity. 4. Cross-selling of financial products. Use SACCO networks to offer insurance, remittances, or microloans to an already engaged customer base. This boosts revenue while deepening customer relationships. The impact of digitization on SACCOs. Digitization is not just a technology upgrade for SACCOs, it's a complete shift in how they operate, serve members, and grow. For financial businesses like yours, it turns SACCOs from small-scale cooperatives into scalable and data-driven partners capable of handling high transaction volumes and integrating seamlessly with modern financial systems. From manual to digital, the transformation. Traditionally, SACCOs relied on physical branches, paper ledgers, and face-to-face transactions. This limited their reach, slowed service delivery, and left gaps in transparency. Digitization removes these barriers by enabling 24/7 account access through mobile and online banking, real-time transaction tracking for faster and more accurate reporting, automated processes that reduce human error and fraud risk. Key digitization trends to implement for SACCOs. To unlock the full potential of SACCO partnerships, it's not enough to simply go digital. The real impact comes from adopting specific, high-value technologies that enhance operations, improve member experience, and create new revenue streams for SACCO and its financial partners. The key SACCO industry trends you can implement are: 1. Mobile and online banking. Allows members to check balances, transfer funds, and apply for loans anytime, anywhere, thereby eliminating the need for physical visits. 2. E-wallet integration. Links SACCO accounts to digital payment platforms, which enables cashless transactions and participation in broader payment ecosystems. 3. Agency banking systems. Empowers SACCO branches and agents to offer core banking services locally, while expanding reach without heavy infrastructure investment. 4. Merchant acquiring. Equips SACCO members who run businesses to accept digital payments. This drives adoption and transaction volumes. 5. eKYC and digital onboarding. Speeds up new member registration while ensuring regulatory compliance and reducing identity fraud. Key trends that will shape tomorrow's SACCO. AI and data analytics. AI transforms SACCOs into smarter, more agile lenders with predictive credit scoring, member behavior insights, and personalized financial offers. Blockchain for trust and transparency. These are immutable ledgers that prevent tampering, reduce fraud, and strengthen member confidence, which is a vital upgrade for record keeping. Sustainable, inclusive business models. SACCOs are repositioning as agents of socio-economic uplift by investing in renewable energy, local development, and preservation of cooperative values. Regulatory and institutional support. In markets like Kenya, regulators are enabling SACCO digitization through shared platforms and digital frameworks. This transforms a sector-wide movement, not just an isolated effort. Digitizing a SACCO is not just about adding technology. It's about creating a connected ecosystem where members, management, and partners operate in real time, securely and efficiently. Conclusion. Across towns, farms, and workplaces, SACCOs have been quietly powering financial inclusion for decades. They're trusted, community-led, and deeply rooted where traditional banking often struggles to reach. For banks, fintechs, and other financial institutions like yours, they're more than community organizations. They are the pathway to engaged customers, steady deposits, and untapped lending opportunities. SACCOs already have the trust, the networks, and the loyal customers. What they need is the technology, speed, and compliance framework that you can provide. This is possible to achieve with digitization. It turns SACCOs into agile, data-driven partners capable of moving money, approving loans, and serving members in real time. And for you, it means entering new markets faster, at lower cost, with customers who are already engaged. Thank you for watching this video.